webinar. So we're here for the final hour. Thumbnail, pullback coming soon. Why? Because, my gosh, man, give us something. Give us a pullback, would you? So S&P, NASDAQ, Dow, Russell, any pullback would be nice. Gap fills. Friday's closed last week to Monday's open. That crazy rip at 3 a.m. with the China-U.S. announcement. It's just a 90-day pause for crying out loud, you know? All right. So, yeah, I hope we have a pullback. I placed a trade today. This is a little bonus trade for my daily profit play. Right now it is, there we go. So around 319 and trade's now trading. I mean, we're right smack dab in the middle. This trade is like spot freaking on. I'm out of the trade already, but yep. Anybody, my God, this market did nothing today. That iron butterfly was freaking rock solid. So $19 credit pulled in is now trading for under $13. Let me update this in Telegram. That's it's pretty good. I'm sure I'm probably hear some traders tomorrow that said, "Yep, we held it on a little bit longer." 3:19 p.m. Eastern time. $19 credit now showing $13 debit. So it's starting to grow, which is good. And what's even nice about this is in the last 40 minutes that we have left here, watch this. Here's the next 40 minutes. That's your profit potential. So max credit was $19. Max profit would be about $1,400. And right now it's pretty darn good. So I'm out of the trade. I took a little winner. I wasn't trying to get crazy risky on it. I added to the mix today. We had winners in daily profit play, 3 for 3, actually 4 for 4 today. So that would be 19, 17, 50. Yeah, 4 for 4 today to have a nice little comeback. So yesterday I was down a little bit, about $580. Today was up 265. So fighting the good fight. And I said it'd take me about 4 days to get back to break even. And maybe by Friday, which would be Wednesday, Thursday, Friday, by 3 days I'm back to break even or better. Obviously, I want to finish the week positive if I can. So that's the plan. All right, let's get this out of the way. Pullback coming soon. Let's talk. So what's the markets look like today? Let's go to the heat map. So we have a bit of a mix. 64% of stocks declining, 33% advancing. Healthcare still getting beat up in the face. Eli Lilly is down hard. Merck, ABBV, that's AbbVie, Guild. Pfizer's down again. Where's Michael at? Asking for Pfizer. We have healthcare down as well. TMO, DHR. I took a winner on Johnson & Johnson today. I closed that one out this morning. That was in my Project Options Edge course. Let me update that right here. Project Options Edge, Johnson & Johnson. So this trade here, trade management update, Johnson & Johnson 398 debit, closing for 4.60 credit, taking the quick win. So that is 12 for 12 now with this service. That is trading for, I closed out of it earlier for 460, and it might be actually offering up a little bit more. It's offering 475 to 480 right now. I'm going to put that in this chat here. So closing for 460 credit. And as of 3:22 p.m. Eastern time on May 14, J&J trading for 4.75 to 4.85 credit. Good opportunity to close and protect. Okay, so I'm going to track that one as a nice little winner. Also in my alert service, so that is that. Healthcare getting beat up pretty badly, mostly on the piggybacks of UNH. I don't know what it is about the healthcare sector outside of there's major reform coming. It could be pharma tariffs. It could be going more to like cash options versus the insurers and all the middlemen and intermediaries. That is maybe going to cut into some of the forecasted profits for pharma. I don't know, but we'll see. I can't imagine it's that friggin' bad. That are we just like, yeah, these big pharma companies can't charge outrageous prices anymore because they can't bill like 10x margins to insurance companies. It's such a, I mean, who likes paying insurance? Nobody, right? Health insurance, car insurance, homeowners insurance. I mean, imagine owning a house in California, it catches on fire and you can't get your house covered, or not what your price is worth now, but what it was when you first bought the house. It's like, that's insane. So it's just the shenanigans that insurance companies get away with. It feels criminal. Same thing that we've got What's an interest rate on a credit card if you let it build up a balance? 23% average credit card. Like that's shark loans, man, and it's legal. Like, how is that legal? I don't know. So anyway, stocks declining today. 64% of the market down today. That's the S&P. Here's your homepage. 64% declining, 33% advancing. Nvidia still a bright shining star today, up almost 4%. Are at 135 now. I did some rolls on Nvidia. I've got a collar that's still getting called away around 130, and my cost base is down to about 119. I actually should be less than that now. Let me double check that in my tracker here. Okay, let me go to my tracker. So Nvidia, break even is 119.68. So I do have about, let me see how many shares I have in Nvidia. Nvidia, it is here. 1, 2, 3, 4, 500 shares. So 500 shares at about 11.32 a share. So about 56.60 on Nvidia, with a nice repair, and I'll roll it. Honestly, I'll keep rolling Nvidia. Now that we're back up into like call level, I'm just going to keep rolling it. So I'm out here 65 days. I'm probably just going to let all of the extrinsic value come out of this one and get this closer to expiration, and then I'll just roll it for another maybe 1 or 2 weeks and just kind of make it into an income play. Hopefully, we stay relatively stable. I mean, obviously, if Nvidia goes to hit all-time highs, I'm still just going to roll my covered calls. It's going to be boring. I'm going to cap the upside, but I'm just going to keep rolling it and generate, maybe 100 or 200 bucks a week on it. Same thing on Tesla. Same thing on IWM right now. I've got core positions that are just generating income, and I'm still looking to position. So the reason I put on pullback coming soon for today's thumbnail is because look at these stupid markets. This gap from Friday to Monday. I would hope that this gap here is going to be filled. I'm hoping that that gap gets filled before we get to all-time highs. I truly do. And based on this OPEX cycle with Friday's expirations, I don't think there's going to be much excitement in the way of that, but there could be a surprise move to the downside coming into Thursday, Friday's trading day, maybe. But I could also see the market doing absolutely nothing, which is pretty much what it did today. And then somehow after the 16th expiration, you start to see new hedges come in and the market flows come back down to fill some gaps. So we will see. But it's interesting how much, I'm sure it was loads and loads of puts built in March and April that now are basically all worthless. So unless the market screams lower, there is going to be a lot of pain in those puts because there's nothing that's going to pay. And then the timing would be, well, they load back up for a quarter expiration, which is June, right? The June 30th OPEX is going to be end of the month, end of the quarter. And there should be some pretty good expiration volume coming to that one as well. All right. Let me post here we're live for today, just to let's get some more peeps dropping into the channel. So we'll go pullback coming soon. If I can spell. There we go. Okay. So looking for a pullback. If we zoom, a pullback, I would be thrilled to get price to fill this gap right here. And, percentage wise, I think a shallow pullback I'm sure there's some bulls that are a little bit eager trying to buy something, but that'd still be about a 3 to 3.5% pullback. I would take it. Could it get deeper? Yeah. I mean, look, we have room to pull back. I would even say as much as 10%, which is kind of crazy, but we could still pull back 10%, and I would still make a decent case to say, like, I'm still bullish. Okay. Now, do I think we're going to pull back 10%? No, because what's going to cause a 10% pullback? I don't know. Noise, panic. So, I mean, to fall, let's say in the next like 30 to 60 days, what would cause a 10% pullback? Something would have to be like revamped. There'd have to be like a complete 180 conversation out of Trump. So I just see if we just have a pullback into maybe a 3 to 5% correction, I think that's probably more realistic, but I'm still going to take some stabs, right? We pull back here, I'll take some stabs going for highs. We pull back here, I'll take some stabs for highs. We pull back here, I'll take some stabs for highs. I told traders this morning, one of the trades I'll be running is if we pull back and to fill this gap, I'm going to be looking for most likely a 1-1-1 trade, which I do some of these in my waterfall income service. I also add another one to that, so it's a four leg trade that keeps me risk defined. But those trades have worked out through this entire decline. We had 2 losses. So that entire service will still winning about 92% of our trades, and we made money all the way up. We made money on the way down. We made money on the way up here as well. So it's a nice trade that I like. I'd actually like to take a trade if I could. Let me actually price one out. I don't think I'm going to get the price that I want, but if I did a trade right now over maybe maybe end of the month, maybe go out to June. Let me see something here. I'm just curious. If I did a SPY trade, or maybe ES, let me try ES. ES is a little riskier with buy power, but let me find out. So ES or MES. Let me see what this looks like. If I went out about 30, there's a quarterly expiration. End of the month is 47 days out. Let me try this one. So if I were to buy, sell, let me see if I can get a little bit more asymmetry here. I'll see what this looks like. So if I go down on MES, we're looking at like a 48.50. Okay, so I can't build that trade with an at the money. I've got to move these down. That's unfortunate. Let's move these down. I'll start this lower. So if I went down to 40, 48.50 or 48.75, so 48.50, maybe this one here. That's an income trade. I'd still want to cap this a little bit. See where I get a credit for this. So I get credit, take on a bit more risk. Yeah, I'm gonna trade this to ES. Let's try a futures trade. I could just put this in SPX as well, but I'm just gonna price something out. I don't think the volatility is high enough for me to take the trade that I want. I'd like to get a dip first, but this is the type of trade I'm looking at doing. So if I know end of month on June, that's 47 days out. And if I did a debit spread there for $500, that's actually $2,500. No, 59.50, 59.25. Oh, this is futures. Okay, and let's go down to my ES feed, which should still be the same price, 48.50. See what this one looks like. 48.50. Now I can grab about $100 income, but I don't want undefined risk, so I need to go back and add another leg to that. 48.50 to 46.50 to 45.50. Yeah, I just don't like that. So we still get income. Let's go 49 by 48 there. Now I get $340 on this trade. That's a good income trade in my opinion out to June. I want to make sure this is risk defined. So how much is this? $60. God, that's a terrible trade. $80, also a terrible trade. $120. Max loss though, that sucks. I'm just not going to take the trade. All right, one more. And like I said, I might just wait. I might just end up doing a 1-1-1 on the SPY. But here's SPX. June 30th. Our lows are about 48.30 on the SPX. Lows around 48.41. So if I were to look at the June, going way down here, 48 and change. So 48, 60, 60, 55, 50. So I pull in some credit. I can't have undefined risk here. So where can I go risk to find? It's 55 bucks. Yeah, it's just not great. So the best trade to me is a 111 on the SPY. That's what I'm more likely going to do between SPY and Qs. If I did it now, if I buy, sell for a profit trap, we do like a 585 by 580. Can I pull in at least $1 going back to like the 480 lows? And the answer is I can't. That's why I'm not going to take the trade now. I need $1.66 to cover if I want a bigger profit trap. Otherwise, I could tighten this up and say, okay, I'll go after $1 profit trap. Right now, I need to cover 35 cents. Well, that's okay. So a 1-1. Try this one at 480. So there times 2. So I get 100 bucks on this trade. I mean, probability is very high that I'll keep this money for 47 days. There is undefined risk. I'm 2 puts in, so that's going to increase my beta weighted delta. So I'm probably not going to place this trade as is. But if we get a vol spike and IV goes up to 20 or 25 with a 3.5 to 5% correction, this trade looks a little bit better. So this to me is an income trade. I'm still willing to own the SPY, but do I want 200 shares of the SPY? Not particularly. So I'd rather do this as a 111, which means if I decrease this to one contract, now I'm looking for, where do I get more income? I'd have to put that strike around. I mean, I don't even like that trade. 75 cents income. It's like, that's not exciting. I want to try to make at least 200 or 300 bucks if I'm going to roll this thing out for, 47 days. $500 is not the lows. So anyway, point is, that's what I'm watching for. That's what I'm patiently waiting for. I think we could have some short-term trading opportunities to pull back, which I'll be looking for in my my double up alerts. Possibly a newsbreakers trade might work out as well. It just depends on how it prices out. I'm actually going to look next week. Let me see SPY. Let me trade this for next week and see if this lines up okay. So if I get through the expiration, go out to the end of the month, and I were to, let's say, buy the 590 put and sell the 580 put, so I can spend $3.70 to make 628. If price goes down my direction, I'm obviously not trying to hold this all the way for 16 days, but this is a pretty good looking trade if you ask me. All I'm looking for is price pulls back. If we just pull back into a bit of a gap fill, pull back to 5807. This is a SPY trade, so I'm looking for a pullback towards 580. Pull back to 580. Go back to 575. Pull back and fill this gap a little bit. I can probably take majority of this trade. So I'm going to take a stab at this one, 590 by 580. Let me see if I can increase that asymmetry a little bit. I mean, that one's okay. So 590 by 580. That's pretty cheap, man, honestly. So what's 626 over 374? Just under 200%. That's 164% return on risk. If I turn 375 into 375, I'm happy with that. I've turned it into anything over $400, $450. I'm happy with that. So I think I'm going to take this trade. Let me go 375, see if that debit fills. $375 not filling. 378 bid price. Not filling. 380. All right, just got filled at 378. Okay, so I'm going to take this trade across the board. Maybe 379 is the faster fill. 379 is the faster fill. All right, going after that. $379 filled. Okay, I'm trying 380. Filled at 379. Okay. 9072. 1608. Come on. 381. Give me a better fill. 381 got filled. Good. Okay. Okay, just a couple more counts here. All right. So there's that trade. It's going to be added in. I think this was going out to, this would be a good one for my double ups. All right, double up alerts, getting a new trade. SPY, buy the 590 put. This is going to be a May 30th expiration. $3.80 debit. Max risk, $10 max credit. Looking for a near-term gap fill on SPY, QQQ, DIA, IWM. This offers a high reward to risk. Okay, that trades in. So $3.80 debit. All right, off we go. Okay, that trade is in. Get this posted. This is going to be an index trade. All right, getting my alerts typed up and posted. Just give me 30 seconds here. So screen on that would be, I'll go blank chart. On the SPY, get rid of my moving averages and just see if we can get a little bit of a gap fill. I could be wrong. It's a cheap little hedge, but if it works out, it works out. All right, there we go. That's the SPY. In for a little trade going out end of the month, looking for a gap fill after this week's expiration. It'd be nice to see a little bit of OPEX taking some profit, or at least getting closer to gap filling. We've had a pretty bit of a big bust up run. You look at the weekly candle. I mean, it's a tiny little body, but from the close last week, I mean, the price realistically did move up about 4% for the week. So we've had some pretty monster candles. I mean, green, it's like these have been pretty darn big. So that body is, 9% which that was, all about the April 9th pause. This one's up almost 6%. This one up a little bit less, almost 3%. This one was dead sideways. And then today with the gap, I mean, we're talking about 4 to 5% because of that gap. So almost 4%. So a little bit of a fade in that gap would be kind of nice to see. And look, I could time it totally wrong, right? The market could go up and hit all-time highs before I get the gap fill, and I'm wrong on the trade, but I'm taking the advantage of the low volatility right now to see if there's some type of asymmetry and high reward to risk setup. Okay. Trade was on the SPY. It was a put debit spread on the SPY for my double ups and Pulver alerts. Right. Today, let's take a look at the iron butterfly just real quick. So right now it is looking better. We're at 344, almost to close. Let's see what this is trading for. SPX iron butterfly is trading now for 16. That's actually less. It was down to like 13 bucks. Now it's back up with price falling a little bit. It's off of my center price. So it's still profitable by a couple $100. But you can see how it's somewhat slippery at the end of the day if it's not right back in the center of where you had that peak. So right now, this price isn't accurate. We're trading at 58.83, so we're actually down here. 58.83 is down here, right? And we're up. It's about right. You're up about $200 on the trade right now. So this is pretty accurate based on the current time. There's only 15 minutes left in the day, so that's what full expiration is going to look like. The nice thing is unless we have this thing scream lower, and this break even would be around 58.80. So we're actually close. I mean, if I was still in the trade, I would be definitely taking profit right now, just because I don't want the last 15 minutes to do something stupid. So, if I've got anybody in my daily profit play that's still in that iron butterfly trade, I would take the profit and not let this become a risky trade. There's no reason for 15 minutes to be, don't be a hero. If it goes back up, then obviously it's more gain, which is exciting, but it's so easy to slip lower and go like literally another 2 points lower and you're losing. So I'd say if you got $200 to $300 on the trade, take it. You had as much as $600 on the trade, take it. That was all updated here. So I was letting traders know throughout the day, 319, that was not that long ago. That was right after I started the session. It was trading at a $13 debit. So that's $600 on the trade. That's a good trade, man. So max risk about $1,000 and $600 winner. I mean, that's a 60% return on risk. That's pretty good. And that trade took, a couple of hours. All right. So that's that. Coming into the end of the week. Tomorrow, any major news? We have PPI news tomorrow at 8:30 a.m. So we have retail sales for the U.S., core PPI, regular PPI, see what annualized is. If we go into the Bloomberg terminal. Let's go to Thursday and see what the expectations are. So 8:30, we have jobless claims, core and headline PPI. Previous is 3.3 forecasted now for core to be at 3.1. Retail sales, previous 0.5 forecasted 0.3. And that's it. We don't have like headline PPI. Yeah, we do. It's down here. It's weird. You like put in core and anyway. So headline PPI is previous 2.7, forecasted 2.5. We'll see what this looks like for tomorrow. And just like that, this trade, I'll just slide this over here. So we're trading it now. So we're close to this peak profit, but right now price is at 580. You'd actually be down a little bit in the trade. This is trading. I mean, you're technically up about $1.50, $1.40, but you can see how slippery it's getting towards the end of the day. Because if you have the put side 590 by 570 and you collected $19, your break even is 58.81, right? 5,900 by 58.70 with a $19 credit, it's 58.81 is your break even. So you got to be above 58.81 in order for this thing to be profitable. If it stays here, like if it goes back up to 58.89, great. You're going to be up around, $9 or $10 on that trade on the put side. But if it drops down, you're eating into that loss on the put side. It's just a fine line between that 58.80. So if we stay above this, money to be made. If we get below that, you're taking on some risk. What a freaking silent day, though. I mean, I'm happy. Like 4 for 4 on daily profit play. I'm stoked with that, and that's always good. So we'll see what tomorrow does. But I'm gonna just keep an eye on this one just for fun. I'm out of the trade with the winner early. And what else do we want to take a look at today? Currency strength. It was all Japanese yen this morning. The dollar was weakest around 6 a.m. and has come back for a little bit of a fight. You got the Aussie New Zealand a little bit softer today. The Swiss is down with the pound and the CAD. Dollar up, dollar yen. I don't even know what the yen did. Overnight it was like 4 a.m. I'm not even sure what happened at 4 a.m. But Japanese yen made a pretty big move. Like this volatility is all Japanese yen. And just like that, back up about $2.80. If price goes up a little bit more, I mean, at this point in the final 10 minutes here, nearly every point to the upside is $100 in gain. So, I mean, you want to see this thing realistically settle right around like 58.95 to 5900. That would be perfect for this trade. And see that crap? Like that's what I mean, it's good it's going that way, but now it's trading down to 1290 in a second because that pop in price. It's so crazy to think how sensitive this stuff is at the end of the day. But if anybody's still holding the trade, I would say don't be a hero. You're up now, $800 on the trade, $790 on the trade, $800 on the trade, but just try to get out of this thing for a winner. That's a heck of a win on the day. So the nice thing is we kind of pinned it around that 58.95 to 5900 handle, and it's holding well. And if you got the courage to hold it towards the end of the day, plenty of opportunity to make a bunch of profit. It was a reverse iron condor or an iron butterfly there, Paul. It was an iron butterfly. Sorry. So the strikes were this. If you see my trade, I did a. Let me take this yellow. So I did a buy 5900 put, and then a sell 5870 put, and then a. Oops, I did that backwards. Sorry. So it's a sell 5900 put and a buy 5870 put. Combine that with a sell 5895 call and a buy at 5925 call. So I went 30 wide. So it was a $19 credit. Okay, I had about $1,000 of max risk, and about 1,400 max profit. So right now, this is pretty spot on. And the reason I'm only getting, instead of having the full $1,900 is because my strike prices are $5 different. So I'm sacrificing that. But this is like as good as you can get it. And the only thing that'd be perfect about this is if it came exactly back to 5,900. Because on the put side, that's your win, right? The call side's taking a little bit of heat in between, right? My call side's at 58.95. So if we go right back up to 5,900, it is right there. But anyway, that was a trade setup, so I could make more in reward than risk on the day. It was today. So the trade was put in this afternoon. It was all done. Issued this trade around 12:33 today, and here it is, closing bell. And right now it's up. It's trading for over almost $1,000 profit. So you're up about $900 right now if you're still in the trade, and it's as good as it can get. I mean, we're literally talking 8 minutes to close. This is current price now, so we're trading at 352, and we're trading right smack dab in the middle at 58.96. So here's your 58.96. We're very close to that peak profit trap. This is my peak profit trap. If we go all the way to the end of the day, all you're going to do is get this little fill right here. So this little flat spot, as long as price stays between those levels, and here are the levels. If it stays between 58.95 and 5,900, you have successfully pinned this thing at the end of the day. So we are very close. Right now, live price, 58.94. So 58.94 is right in here. So we're just on the left side of that profit trap, and we still have 7 minutes left. A lot can happen in 7 minutes. This market could fall lower and take down some of that profit. This market could be perfect right between that 5895 to 5900. This market could shoot up past 5900 again on this side of the profit trap. I would like to think that the market would be somewhere in this profit trap by the end of the day, but this is the risk that I'm really not willing to take. I don't like to hold. I mean, when I did the trade earlier today, I posted this in Telegram. I posted this. Around 2 p.m., I want to look at the trade. This trade was already up around $300 right here by 2 p.m., right? And it's fine. Like that was pretty good. You give yourself 2 hours of relief. You don't have to watch this thing to a closing bell. It's a nice little winner on the day, but obviously in hindsight, it's like, oh, I wish I should have, could have. No, I mean, you got to take the risk. You got to take the risk. If it was down below 58.80, you lose on the trade. If it's up above 59.10, you lose on the trade. But we are like spot on at that 5,900 today. So I mean, it's kind of a lucky pin because it's right back where I need it to be, and we're getting much closer in the next 6 minutes to full profit expiration. So here it is, $19 credit trading for $9.20 debit. So I mean, you got $900+ on the trade, creeping up towards $1,000 on the trade. But the iron butter, like this is the profit. It's usually an iron butterfly looks like this. I staggered the calls and puts, but the iron butterfly usually looks like this. Okay, and you're trying to pin this thing towards the later half of the day, but the risk is down here. So it looks a lot like a butterfly spread, but instead of a butterfly spread is um, you sell the middle, right, and you buy the wings, and you're trying to pin that price. This is I'm doing it at the money. So I sell the middle at the money, and then I buy the wings out here. Versus a butterfly spread where I'm trying to go out of the money and try to pin a trap above or below. Because I saw price was very quiet today, kept gravitating back to 59, so I use that as my area. So that was the trade. But we'll wait and see. I'll just keep an eye on this one. I mean, now it's trading for $7 and change, so you're up about $1,200 if you're still holding this thing. I got to ask, anybody in my daily profit still holding this thing? I'm gonna ask. Is anybody still holding the iron butterfly? $19 credit. Now showing $8 debit. So just curious. I mean, I've got some pretty wild traders that are willing to sit on trades all the way to the bitter end in the final close, and take on that risk. And so I'm pretty sure I've got some traders that are hanging on this thing too, which is exciting because there's a nice $1,000 winners on one contract. But if you're not in the trade, this isn't a FOMO thing. I'm not trying to make anybody feel bad. Look, I got a trade for $150. I had 4 winners on the day, so for me, I made 265. Actually, no, made today. Yeah, 265, $265 today. All right, that's fine. A little SPX intraday, I'll take it. All good. 3 minutes before the close. So here's where it is. We're at 58.91. 58.91 is just on the left side of that profit trap. Here's 58.91, right over here. But if it stays right there, goes down, we lose some profit. If it goes back up towards that 58.95 level, that's pretty perfect. And you never know. 5892.90, 593. So what I'm doing is I'm watching this in real time, and I'm just dragging the cursor up here so you can see it. And we're getting closer and closer to expiration. Just in the last, here's 57. There. So we're with 3 minutes left. So we're near that max profit. 5894 and change. I mean, it's right there, baby. Very nice. And trading now down to $6. So edit. 3:58 p.m. Now 6.75. I'll just put 670 debit. So right to the bitter end. And we're at 5891 again. So we're back down here. Still a nice chunk of that profit. Still up about 900,000 bucks. And we'll see where the close is. I'm just curious where the close is. It'd be awesome to see this thing like right at 5,900. And it's more like the lesson of, yeah, you can certainly take on the extra risk and trade these things towards the end of the day. But here it's going down to 58.90 now. Got 58.90, 91, 59, 91.50, 59.01, 58.91, 58.92. Feel like an auction house. 58.92.50, 71, 58.90 again, 58.89, 58.90. Yeah, it's all over the place. We got 1 minute. Where's this bad boy going to close? It's still a heck of a win. $91.05, $90.17, $91.13, $90.56, $91.51. What's TradingView say? SPX, $92.58. Platform says $92.59. If that is where it's going to be close and settle, then that would be for your winner. You have the 5,900 minus 58.92. So that's $8. Okay. And you take that away from the $19. So you made $1,100 in the trade. That's where it would cash settle today, roughly, minus the decimals. But you're making roughly $1,100 on a trade. That max profit would have been up $1,400. Max risk about $1,000, but made about $1,100 on that trade. So end of the day, right here, we settled at 5892.57, or my broker platform is 5892.58. We're roughly up about 1,100 bucks. So 5892.58 is right here. We're about $1,100. So good stuff. There's your end of day expiration, 92 and change. Cool. So that's the winner. Took, 3.5 hours, and you had to have the courage to hold it all the way to the close, but it was right on that level. And this is what I saw all day. I just saw this 5,900 level all day. There was no real direction. I mean, this market from the put and call volume, look at how even this was. Calls, puts, I didn't see anything more than like 10 or 15 points separated between call and put option volume. It finished at 4 points different. Very tight market today. Crazy. Crazy, crazy. Okay, that's where we're at. Go back to the daily chart. There's my SPY. Okay, fine. Give me a gap fill. Make me some money on the SPY trade. Everything is, so SPY finished 0.13% positive. Q's up 0.6%. Dow down 0.3%. Russell down almost 0.9%, 0.87. VIX was up a little bit. SVXY down. Dollar index up. Okay, was looking red for the day. Came up and closed on a green candle. Oil probably range bound, hit resistance at 65. UNG, I've got a 19 call. I'm just going to keep rolling this thing out. I think I went out to the next week on UNG. So UNG 5 by 19. So this one's out to next week on the 21st, which should be the Wednesday. So if it doesn't get above 19, then I just sell another call and I just keep writing calls against my. It's going to be a diagonal spread, so I'm just trying to get this debit as low as possible. My debit now is down into like $10 and change. So I'm trying to just lower the cost basis. What else? Gold, nice red day. I'm actually very happy to see gold falling. We'll see how orderly and kind of obedient gold is going to fall. If we go this, let me change the color here. If we go high, low, lower high, lower low, lower high, lower low, a little channel would be fine. If there's a little bit of a capitulation move to the downside, I would be really happy to scoop up some gold between like 3,000 and 20. I'll even say between 3,000 and 2,800 bucks. $3,000 and $2,800. I'm going to start taking some more trades on gold. I think we target the highs again, and if you want to hold it longer term, maybe some high highs. But I'd still love that trade. I mean, if I get in here with some option trades, get back to the highs again. That's a 16.5% move. Trading gold futures, trading GLD, trading options, I could make some pretty nice gains there. Silver, down a little bit. I'm just going to hang in there. If silver comes into like 29, I'll start dabbling with some more trades. Otherwise, I'm going to wait and see if it breaks this level. So let me set a chart while I'm down here at 29. So 29.15. So just give me a heads up over in a attractive spot to take some trades. That'll be silver futures and SLV for me. Bitcoin flat on the day. IBIT, I've got covered calls this Friday at 62. Unlikely going to get called away, but I'll be watching. MicroStrategy is still up to 416. I do have a bull call spread that's doing pretty well. It is here, MicroStrategy. So a bull call spread is up around $300. I've got a lot more profit potential. This one could potentially be up $1,100 or $1,150 by the end of expiration, but it's a long time. So I'm most likely not going to hold it all the way to expiration. But if we see Bitcoin continuing to rally higher, we get to all-time highs. This trade is probably going to trade for 350 debit that offers me $500 a profit, $600 a profit, $700 a profit. I would say if this is up, max profit potential would be 1150. So 1150 over the 350 debit. So I have max profit would be 328%. If I'm up, let's say 200%, I would be considering taking some profit. If I'm up 250%, I know that I'm getting into that threshold where it's probably better for me to take the profit and move on versus hoping that it gets me full profit and have to wait all the way to expiration. So that was looking pretty good. Ethereum, nice trend line break. I think if there's an opportunity to buy a dip on Ethereum, I haven't talked about this in a while because it has not been on my radar outside of I told traders, wait for the trend line break. Well, it's funny how fast it happened, right? Surge, surge, surge on the trend line. 3 days, this thing was automatically confirmed. Now, I don't want to just instantly buy it, but if you're willing to dollar cost average, this isn't a bad spot. And I'd say you target the highs. So area 1, if we pull back here, area 2, trade back to the lows, area 3. I mean, this area of investment, if you put, let's say, a 1% allocation there, that automatically can offer up maybe 1.5% reward. Make sense? So if I was willing to go like, 1%, 1%, 1%, put a 3% risk on here, then I probably have a 4.5% upside. Like that's pretty good. I think for an allocation, that'd be a pretty good trade. I think the structure looks really good to play some catch up here. So I haven't been following it because Bitcoin has been performing so well. Ethereum's just like, just wait for a trend line break. Copper, still pretty choppy. I actually wonder what like a strangler iron condor looks like on copper. I'm gonna write that one down for tomorrow. It's probably a crazy risky trade, but I'm just curious. Maybe take this trade right now. I'll just price it out. So if I went out, let me go about 37 to, let's go 44 days out. This is before July. How choppy is copper going to be? If I were to sell and sell, expect to move about 80 points. So if I go 415 to 95, 415 to 95, and 420 to 330. I mean, it's a little crazy, but I get 60 points for it. I can't. I mean, this is not a great. I don't love this trade. I mean, I'm not going to risk $3,000 in this trade. That'd be like the high reward, but also high risk. I mean, you still get asymmetry. You've got potentially $5,300 of max profit. Also, this one's going to take a while, but that trade will work out if we see copper stay somewhere in here. It's extremely volatile, so that's a very risky trade. It might be a little bit easier to trade something to the effect of this. If I just did like a put fly, right? I just do a put fly like so. I mean, look at this trade. If we stay somewhere in between these levels, I mean, I could risk $50 to make $1,400. It's going to take a long time to make this money, but that type of reward to risk could be pretty good. We go, let's go 15 or 20 wide. Let's go 30 wide to 85. So that's $400 to make $2,500. I'd tone that down a little bit. So that's up 25, down 25. Okay. That's, I don't know. How much volatility do we have here? Expected move in a given day. Let's go to like in a given week. What's our ATR in copper? Average move is about 16 to 30 points. So average move about 16 points a day, 30 points in a week. I mean, it's a low risk, high reward trade. It'd have to be like price could dance around here, but if somehow just like settles in around that 4,600 level, that could be interesting. That's just out a long time, man. 450. Oh shit, I'm on the wrong chart. Never mind. Copper. Totally different. Never mind. Forget what I said. 42 days out to June 25th. This one, if I did a put fly, risk $12 to make 500, risk 12 to make 700, risk 25 to make 1,000. Our average, I mean, this is only 0.05. We get bigger daily swings in that. Um, this is like a lot. This is like a lottery trade. How comfortable am I in this trade if I go one strike more? That's 0.06 to 0.06. Risk $60 to make $1,400. $90 to make six. I'm going to take this trade. There is a very low probability of this trade winning, but if we are somehow in this like 4.64 level over the next 42 days, you never know. I'm gonna throw a trade down that max risk is $90. This thing can go up, down, but if it just somehow stays sideways in here as we get towards expiration, let me build this trade out. I don't know if I can build this out on futures, but let's find out. Can I go to haha, look at this bad boy. I'm going out to they don't have my contract. Oh, darn it. You would. Gotta upgrade for futures. All right, anyway. 4.64, 0.06 down, 0.06 up. Now it's a little bit higher risk. What the heck? All right, now it's $75. I'll see if I can take this trade. So about a $90 max risk. See if this will fill. $105 max risk. Come on, man. 117 max risk. All right, I got filled. I'm in. 0.0040 on copper. Lottery ticket play. My guts, the body of the butterfly is 4.64. The wings 4.7, 4.58. It's a long shot. I'm risking $117. This one's coming closer to expiration. I'm just going to let this one kind of burn in there for a while and see if I turn it into a profit. So it's a long shot. It's a low probability, but it could pay out really well if copper does in fact stay really sideways. I will just keep a close eye on it. So let's go. This is going to be a commodity trade. HG. 625 expiration. Buy the 4.7 put. Sell the 4.64. And buy the 4.58. 0.0040 debit. Max risk on that trade is around $100. And $1,400 to be my max reward. if copper stays choppy sideways in the coming weeks. I will plan to spot check this trade weekly and see if it offers, 100 to 200 to 300 plus dollars reward well before expiration. All right. So I'm in the trade there. And the way I'll chart this one is here. So I'm going to zoom in on like a 1 hour chart. And we go 4.64 to 4.7 to 4.58. So it's a real tiny window, but it could still work. 4.70, 4.64, and 4.58. So that's the trade. If we stay inside there, that's good. Tony on Qs. I mean, I think I think we're due for a pullback first. I mean, I can see the Qs continuing to try to find all-time highs. It's not that unreasonable to think we can hit all-time highs at 540. The issue that I have is how we're getting there. So I'm hoping that we get through this Friday. Maybe there's a little inefficiency here to pull back to. Maybe that starts a bit of a decline. Just give us something. Like there's just so much demand that'd be lining up on every chart, like gaps in futures, gaps in the indexes, and not just little tiny slivers. Like these have all been like it's an unchecked gap. It's an unchecked efficiency level. It's an unchecked gap. It's an unchecked gap. Unchecked gap. I mean, I'm a little shocked that the market's like, yep, just keep going higher. So like I said, I think Qs can get up to all-time highs. I just hope it gets there with a pullback first. So I'm looking to, get a pullback and then start positioning for all-time highs. Between this area and this area here, I'd say that's my, buy level 1, buy level 2, and then trying to say that my price target is going to be all-time highs and beyond. I mean, I think we can get to all-time highs with some momentum, but I just hope we have another opportunity to at least position for that. So that's my thoughts on Qs. All right. Any other charts? Any questions for today? Currency strength again was strong. Dollar crept up since 6 a.m. Got back to a pullback spot. Markets were pretty mixed today. Had a nice little day, honestly. Like 4 for daily profit play. Did a nice webinar. Had a winner on double up. So took one winner, one loser to net some profits today on double up. And yeah, the iron butterfly worked out really nicely at the end. I just took it off early, but still offered a good win. New trade in the SPY, new trade on copper, and we'll see what happens going into the next couple of days. So, all right, if you don't have any other questions, I'll let you go for today. Thanks for being here. If you're not subscribed to the channel, kindly subscribe, click the notification bell so that way you know when to go live. We're almost live every single day, 3 p.m. Eastern time for the final hour. If I'm a few minutes late, it's likely because I'm tied up in a live webinar or previous session, but I'm usually live. If I'm not live, I typically post a video to premiere on my YouTube channel. So between youtube.com/Chris Pulver and youtube.com/Financial Wars, all are welcome to come and follow along and subscribe and keep that content up to date. So I appreciate all the likes and thumbs up, and that helps every video. YouTube channel's been growing pretty nicely. I've only been doing it for a couple of years, but I'm doing it every single day, and we are up to around 9.2 thousand, so not bad from zero, I think 2 years ago. But hopefully the consistency and whatever the algorithm needs, what helps is your support and just a little bit of likes, comments, engagement, live chats, all that good stuff. And I appreciate it. So, all right, everybody, have a good rest of the day. I'll see you tomorrow. Thanks. Bye.